So what are examples of prepaid deferred expenses? So you might have supplies, equipment, rent, prepaid insurance. Any of these prepaid ideas that we have to have as an adjusting entry at the end of the year or at the end of the period. So like prepaid insurance is the easiest example. Prepaid insurance, we're saying that we paid $2,400 on December 1st, 2017. At $2,400 on December 1st for 24 months. On day one, we debit prepaid insurance expense or prepaid insurance by $2,400. And what would we credit? Like someone in the class, let me know. What would we credit? Let's make it a little more interactive so my throat doesn't go.
$2,400?
We credit $2,400, but what's the account? Great point. Great answer.
Insurance expense?
No. Good call out though. What are we spending?
Wouldn't that be an asset?
What?
Would it be cash?
Yeah, the cash, exactly. Whenever we pay something, we're paying cash. Cash is an asset. It's decreased by a credit. The amount would be $2,400. Great job. And good call outs. That's what it can be confusing. Expenses are debits. That's why we're going to have you learn all of these. And that's why you're going to have to drill it. But the idea here is debits always equal credits. Debits, we're increasing our asset by $2,400, and then we're decreasing our assets by $2,400. Net impact of the financial statements, nothing. Assets are still the same. But then at the end of the month, we have to make an adjustment because we've used some of that insurance. We didn't have any money out the door, but we used it, right? How much did we use? We used $100. The 2,400 divided by the 24 is 100. So we'd reduce our prepaid insurance by 100, increase our insurance expense by 100. Does that make sense? So no cash happened. Nothing cash related happened at this time. At the end of the month, we had to know to make this adjustment. Does that make sense? Any questions? I know that you're going to have to memorize what is an asset account and how these interplay, but I'm trying to show you how this all be finalized and then go back and memorize and go practice it all. So that's called an adjusting entry. We call it an adjusting entry because no cash changed hands when we had to do it, and we had to do it at the end of the month.
I have a question. Would we actually write ADJ like adjustment in the journal, or is that just to help the students understand it?
Just to help the students understand.
Okay, thank you.
Good question. We just call it a journal entry. The balance sheet. So at the end of the day, the balance sheet is going to show 2,300 of prepaid insurance, and then you'll have 100 of expense. So that adjusting entry, you expense it when you match it to its revenue that it's generating. So that insurance was used for a month. That insurance helped us make revenue for the month because that's the period we operated. And so in our income statement for that 1 month, we'd have a debit to insurance expense, a credit to prepaid insurance. That's our adjusting entry. Debit to insurance expense, credit to prepaid insurance. And then so on our financial statements, that would decrease our assets and decrease our equity. So they're all in balance. So you kind of see how it works here. Debit, insurance expense, credit, prepaid insurance. There's some more examples of adjusting entries. I'm going to go through these specifically because these are a little more complex, but then I also have those videos that will help you too. Supplies. Fast forward, purchased $9,720 of supplies. So when they purchased it, what's the journal entry? We debit what?
Supplies?
Yeah, we debit supplies for how much?
$9,720.
Exactly. That's how I want you thinking. Whenever you see a transaction, that's how my brain works now. Whenever I do something, I think, okay, I debit this and I credit that. That's how your brain needs to work for this class. So you're debiting the supplies. Why is supplies being debited? Why are they being debited? Because it's an asset. Assets are debited. 9,720. So because there's a debit, there has to be a credit. So what's the credit?
Cash?
Cash. Perfect. cash because we're paying cash for it. We purchased 9,720 on cash. If we paid on account, it would be an accounts payable. It'd be a liability. Cash is an asset. Assets are reduced by a credit balance. So net impact on the assets are nothing. And so that's our first journal entry. Debit 9,720, credit 9,720, debit supplies, credit cash. And then at the end of the month, we do a count. And you actually do this, and it's interesting. If you go into my field of work and become an auditor or an accountant, I used to have to go, my first year, you'd go do inventory accounts, but not just for, you think like a Michaels or a Nordstrom. I would do inventory accounts for companies that had sold steel beams, or you might do a brewery, or you might do something that sells chemicals or vaccines. So you would have to count at the end of the month how much of this stuff is left. And so at the end of the month, they say there's actually $8,670 left of these supplies. And so of that, we need to make an adjustment, right? No cash changed hand, but at the end of the month, to make our financial statements correct, we have to make an adjustment. What is that adjustment? The adjustment, you just do the math here, 9,720 minus 8,670 is our 1,050. So what's that adjusting entry? Now that we've used the supplies, what do we have to do? We have to expense them. So what's a journal entry for that? What would we debit? What would we credit?